tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. It's Wednesday, April the 8th. This is what is on the market's radar. A 2-week ceasefire and risk assets surge. But is the Strait of Hormuz really open? And what longer-term risk premium should attach to Middle East assets?
Let's talk a little bit about where we are with these markets. You get into the office this morning, you look at the screen. Just take a moment to enjoy it, because the question is, where do we go from here? Brent crude is down by 14%. Euro Stoxx 50 is up by 5%. Euro dollar is up by 0.8%. You do not see these kinds of moves very often. The question I think a lot of traders are going to be asking themselves this morning is, do I go with this or do I fade this? And I think that's the question that I think we need to debate over the next couple of hours. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. 1 minute past 7 here in London on Wednesday, the 8th of April, and it looks set to be a monumental session, a dramatic session ahead. Certainly some big moves priced in at the start of the European equity session. So just as you said, Guy, let's take a moment to reflect on the moves that we are seeing already in markets and about to see through the European session before we pour cold water on some of it and ask a lot of questions about where things go next. But just in the very near term, we've got oil dropping the most in some 6 weeks. That takes us down to the area we were around the middle of March. And some of the moves in the Treasury market, incredible. Also, 2-year yields coming down to where they were beginning middle of March. So that's important. Asia stocks down at a 3-week high as a result of this. And futures for Europe pointing up by 5%, more than 2% over in the United States. These are set to be some staggering moves at the start of trade.
OK, so let's look at the last 6 weeks. Since the 28th, since the war started, there's only one sector in Europe that's in positive territory. That's the energy sector. Do you sell that this morning? How hard do you sell that this morning? Does that mean that the FTSE 100 gets impacted and hit hard on the back of that? Still looks like it's going to be higher. Luxury's been the hardest hit. That looks like an area that could rebound this morning. You've got real estate. You've got all kinds of other sectors that have been beaten up. Banks are going to be a critical one. I was talking to Neil Campling about this on our markets desk. What happens there? Do you believe the rate story? Do they come down with oil starting to move on the back of that? So I think there's some really interesting nuance here. But if you're a skeptical trader coming in this morning and you see the kind of moves that we're seeing this morning, is your first instinct to say, actually, this is overdone? Is this something that will fade? Yeah. Do I believe what's happening on the ground will stick?
Yeah, absolutely. And just as a reminder of the scale of the moves, natural gas prices coming down in Europe by 18%. You don't see this very often. No. So these are incredible moves, and somebody will have been positioned for this.
Somebody will, but it's interesting. We'll talk about some of the hedge funds in a minute. The leverage hedge funds have lost money. Some of them will have been positioned for this. Somebody's making money somewhere. I don't know whether or not that is going to kind of compensate for losses. You don't know where positioning is right now, but you do know that it's all over the place. But what do you do this morning? I mean, do you start with the markets and think about the geopolitics second? Do you start with the geopolitics and then think about the market reaction to it? I don't know. There's going to be a period, I think, towards the end of this week where the market goes into another difficult weekend, not knowing enough.
Yes, exactly. And there are so many things we don't know. Let's start with what we don't know about the Strait of Hormuz. I mean, what defines it as open is going to be one of the things that we're going to be talking about over the next few days. President Trump has said it's got to be a complete and immediate reopening. Iran has said that it will be open, but in coordination with Iran's armed forces. Are they going to be charging for access? The Iranians and the Omanis have been working on a project that looks like that. What kind of a concession is this to Iran? And meanwhile, hundreds of ships are stuck still inside trying to get out, and we'll be tracking those as they try and make a move.
There's a great function on the Bloomberg that you can do that with. I think it takes roughly a week, 5 days, let's call it, for a VLCC to get into the Gulf and out of the Gulf fully loaded. But I'm assuming that is a process that is going to take longer this time around simply because of the volume of traffic that is going in and out of the Gulf. So you've got a 2-week period. How much of what is in there now can get out?
Yeah.
And how much of what is sitting outside can get back in again and reload and start to get things back to normal? So how long does that process last for? And if it takes a while, do you just assume that oil prices are going to be higher? Is insurance going to be higher? Are the shippers going to have to pay a higher cost as a result of this? As you say, we don't know. Is there a $2 million charge on every single ship that goes in and out?
Absolutely.
I don't know.
Absolutely. And we're showing here this map function on the Bloomberg terminal where you can see almost real time the number of ships that are clustered around the Strait of Hormuz, around that peninsula, trying to get into the Persian Gulf, trying to get out of the Persian Gulf. And you raise an important point, which is about all of the various players, because when we've been tracking the way that this shut down traffic through the Strait of Hormuz, it became very clear that it wasn't just a question of insurance. You know, could you get insurance? Well, often you can get things for a price. But the prices were astronomical. But also it was about the owners, whether they would actually send their assets through there. The crews, whether the captains would actually go through. And all of these questions are going to still be being asked. I think it is interesting. If the Iranians are opening things up through the Strait of Hormuz, what do we conclude about where or if there are any mines in the Persian Gulf? Because and who has full understanding of all of that? Because that will be on the minds of the shipping industry.
Why would the Iranians give up what appears to be their biggest assets coming out of this conflict? We have control of the Strait. Why would you completely give that up? So assuming there's going to have to be a caveat that comes with that, that the Iranians are going to try and impose over the longer term, which takes us on to the longer term question. What do you do with oil prices now? Do you look at them and go, we were at 60, and the long-term average over the last 5 years is something like 75. Do I put $10 on that now? Do I put $20 on that? So if you put $20 on that, say you get to 70, 75, 80, what does that do to the global economy? What's the longer-term picture here in terms of what this does to the growth story and the inflation narrative?
Yeah, absolutely. I mean, even if we take an optimistic view and we say there will be no more fighting here, what kind of scarring has already happened to the infrastructure that's in the Middle East, and what does that mean for the elevated nature of oil prices, for the ability of that energy to get out of the Persian Gulf? That's just one question. I mean, when all of this happens, when the ceasefire is in place, we'll get a report on the ground later on in this hour, Guy, but we've seen attacks actually being reported from Saudi Arabia, from Bahrain. Since the ceasefire was announced. So even there, we don't have clarity. What exactly is Israel intending? Mixed signals around Lebanon. They don't seem to think that Lebanon is involved. And then we come to further talks at the weekend, probably hosted by Pakistan. And what should our expectations be there? President Trump has talked about a 10-point plan from the Iranians. Lots of the things on their previous 10-point plan do not look tolerable to many in the US.
But let's assume that President Trump does not want to go back. He clearly is not he will not want to go back into the intensity of the period we've just had and the risk that represents to him politically gas prices, whatever it is, the economic story in the United States. He's not going to want to go there.
Yeah.
So what will he tolerate to not go back there, I think is an interesting question. And will he tolerate a more restricted Strait of Hormuz, because he says he doesn't rely on that, if the rest of the world has to pay the price?
Yeah, and yes, exactly. And who will he say she needs to work with the Iranians to arrange that shipping through the Strait of Hormuz? Maybe there's a role there for other global players, and we've seen the British trying to start some of those conversations with 40 countries around the world.
Evie Hamburg is going to be here shortly. We'll talk about gold with him. He's going to be joining us from BlackRock. Henry Allen, Deutsche Bank macro strategist, will be here at, let's call it circa 8 o'clock, just after the market open. Sanam Vakil, Chatham House, is going to be joining us a little bit later on as well. We'll talk the geopolitics. We'll talk to the questions that Anna's just raised about kind of what happens next. What do these weekend talks look like? What do we know about the various plans that are now being put forward and whether or not they will stick? From
a market perspective, there are some data points on the docket today, not perhaps the high level, but Euro area PPI, retail sales, we get that. From an earnings perspective, maybe Delta Airlines, really interesting to watch for, and that comes before market over in the US, just to get a flavour of how the aviation industry is dealing with their oil drama right now. Mary Daly will be speaking. We've heard a lot from the Fed of late, but everybody in the dark, everybody lacking conviction was the last meeting, the last Fed meeting narrative, and we'll get the minutes from that a little bit later on today.
Yeah, we will. Looking forward to that. What else do we need to know this morning? Bloomberg understands that Apple's first foldable phone is on track and will arrive during the company's normal iPhone launch period, which comes a little later on this year. Sources say the company is scheduled to introduce the foldable model in September. It's likely to come alongside the iPhone 18 Pro and Pro Max. The device is a major initiative for Apple, which is seeking to expand the iPhone line with new designs, pricier models, of course, and enhanced features. Moody's has cut the outlook on the flagship fund of the private credit giant Blue Owl Capital to negative. The rating firm moved the outlook on Blue Owl Credit Income Corp from stable after, quote, significantly higher than peer redemption requests in the first quarter. The $1.8 trillion private credit industry is facing an investor exodus amid concerns over lax lending standards and a failure to clearly explain liquidity restrictions. Back to the story we were just talking about. Macro hedge funds struggled in March as the war in the Middle East upended inflation expectations, leading to steep losses at many of the industry's largest firms. Sources say Said Haidar's Jupiter fund lost around 12% in March, and Bloomberg understands that Brevin Howard's Master Fund fell 6.6% for the worst monthly loss in its 2-decade-plus history. These are clearly they've been caught off guard. Clearly they expected inflation to come down, but these are highly leveraged funds.
Yeah.
That are making big aggressive positions. So the market moves X, they're going to move X plus if they get it wrong.
Yes.
So they can, but if the market then reverses the other way, they can also reverse some of those losses.
Yes, and I wonder if they've all been caught out by the same thing or different things.
Yeah.
But, you know, these are funds making big calls around interest rates, inflation, geopolitics. I wonder if the fact that the midterms are looming had some off guard. I don't know. But this was definitely a theme of one of the events I was at just before this war, 2 weeks before this war started, where a lot of people were convinced that this won't happen in the Middle East just because the midterms are coming. They're on the calendar. President Trump won't take that risk. And I just wonder whether there were others caught out by that kind of thing.
Clearly these guys were caught out. And the leverage they run will make being caught out really hurt.
Yeah. And I wonder if they were caught out in the bond markets as well, because there were lots of questions about what kind of role will bond markets play? Will they focus on inflation, or will they be that haven asset thinking about growth? And it turned out to be the former for a lot of the time since the end of February. OK, that is us setting the agenda. Coming up on the programme, IATA Director General Willie Walsh sees the 2-week Iran ceasefire as positive for the aviation industry, but says jet fuel and ticket prices will remain elevated. We will watch how European airlines fare at the market open. Plus, New York Fed President John Williams says he expects little change to underlying inflation due to the energy shock from the Iran war. We'll bring you some of that exclusive interview. Up next, we will be hearing from Joachim Clement, who is head of strategy at Panmure Liberum. We will get into a conversation there about where we are in these markets now and what we should expect over the days and weeks to come. If you have questions, please get involved in these conversations. We do like to hear from you. IB plus BBTV Go is the function on this very sunny day in London. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back. This is the opening trade, 15 minutes past 7 here in London on what sets to be a day of really strong gains at the start of the trading session here in Europe. Euro Stoxx 50 futures then up by 5.3%. Let's return, though, to our top story, and that is, of course, the fact that the US and Iran have agreed to a 2-week ceasefire, sending oil prices lower and lifting global stocks. It is a temporary reprieve for 2 weeks for the region, buying time for the two sides to reach a longer-term agreement, perhaps, hopefully, to end the war. For more, let's bring in Bloomberg Horizons anchor Jumana Basechi, who is in Dubai for us. So remind us what we do know, Jumana. We've just been through a host of questions. Don't know. Remind us where we've got to, what has been achieved here.
Well, we have a ceasefire, which is a dramatic a turn of events from where we were about 12 hours ago. And it's worth pointing out that President Trump put up that Truth Social post about 90 minutes before that deadline, and that threat to follow through on the full destruction of Iran's civilian infrastructure, their power plants and bridges, if they did not yield to the U.S. demands. So 90 minutes before that deadline, they announced a 2-week ceasefire that was also echoed by comments from the Iranian Foreign Minister Abbas Araghchi, who said in a statement that for a period of 2 weeks, safe passage through the Strait of Hormuz will be possible via coordination with Iran's armed forces. We'll come back to that point in just a moment. And then later on, a couple of hours later, it took 4 hours, but the Israeli Prime Minister as well, Benjamin Netanyahu, said that Israel are supporting U.S.'s ceasefire with Iran, but that it would not necessarily apply to Hezbollah. So an important caveat there. And we also know that the key mediator, Pakistan, their prime minister has invited all relevant parties to Islamabad for an in-person meeting to take place later this week. Unclear at this point who exactly will be attending, though there are many reports overnight suggesting that the vice president, it was J.D. Vance, who really helped get this deal over the line. President Trump earlier this morning speaking to AFP suggesting that China also played a role in getting Iran to the negotiating table. Now, where things stand right now, all sides seem to be painting this as a victory. Trump said earlier this is a total and complete victory for the U.S., but at the same time, Iran overnight have presented their list of 10 demands of what they would like to see And some of those terms are extremely maximalist still, including the removal of U.S. bases from the region. They want to maintain sovereignty over the Strait of Hormuz. They want Israel to cease operations against their other proxies in the region. And of course, we've heard from the Israeli Prime Minister that for them is not a non-starter. So there's still a lot of daylight between the two sides, but at least for now, as you say, we've walked back from the brink and no immediate concerns about an escalation over the next 2 weeks.
Jemana, just briefly, talk to me through what happens next in the Strait of Hormuz.
Yeah, so this is a major point and worth reminding everybody that the wording with the Iranian foreign minister's post suggests that Iran will agree to the opening of the strait so long as there's coordination with Iran's armed forces. They're suggesting some oversight still over which vessels get to pass through the strait. Overnight, Associated Press reporting that there may be a joint system, a toll structure set up between Iran and Oman. Unclear if that's going to go ahead, but what they are asserting is their right of sovereignty over who gets to pass through. And remember, there are 800 vessels still sitting in the Persian Gulf awaiting that transit. Unclear at this point if they're going to go through. So we're going to monitor in the next few days.
Very carefully. Jemana, thanks for the update. Really appreciate it. Jemana Basechi joining us out of Dubai. Joe Clements here, Managing Director and Research Analyst of Strategy and Economics at Panmure Liberum. Good morning.
Good morning. A really good morning.
Very good morning. Fantastic morning if you're long some of these assets. Do you believe this move? Do you fade this move? What do you do with this move? You're sitting down at your desk. You're a PM this morning. What do you do?
Well, I mean, I've been speaking to so many fund managers and PMs over the last month, and they've all been basically reduced to an investment horizon of 24 hours or less, namely the next Trump Truth Social tweet. Now they've become real long-term investors, and Ben Graham would be proud of them because now we can look forward 2 weeks. But in truth, you don't really trust this ceasefire just yet. First of all, as we just heard, there's still a wide gap between the demands of both Iran and the US. And then the other thing is we don't know what's coming after 2 weeks. All we know is that we're trying to get as much oil, LNG, helium, fertilizers, etc., out of the Persian Gulf in the next 2 weeks, no matter what, in order to reduce the shortages that are threatening the US and Asian and European and Asian economies.
Am I still watching the oil price really carefully? Is that my key barometer in terms of telling me which way the weather is going to change? If it goes down, I assume that I buy more Europe and maybe less something else. What do I use as my North Star right now to understand which direction we're traveling in?
Yeah, the oil price is definitely going to be center of the attention over the next 2 weeks. But I think the other more important and more interesting thing to look at is where do bond yields go? Bond yields have moved incredibly high, especially in Europe, as markets have priced in rate hikes by the Bank of England, the ECB, and other European central banks. And I think with this relief rally, we will see some of those rate hikes being priced out again, lifting some of those stocks that are more yield sensitive.
Good morning, Joe. And that takes me nicely onto what I was just obsessing with, and that is where European bond market's going to open up this morning. We have incredible moves on the Italian BTPs, 34 basis points lower on 10 years. These are really big moves.
Yeah.
Your thoughts on the scale?
Well, that was quite shocking to hear just now because I didn't hear that number before. But to be perfectly honest, I would have expected a massive move in bond yields this morning as a relief rally. 35 basis points indicates to me that we're pricing out several of the 2 rate hikes that the ECB has been priced in over the last month. I'm still in the camp where I think the ECB will not hike interest rates at all. But if that goes out all in one day, then I would say that's a pretty aggressive move in one day and a bit too much in the other direction.
Yes, I mean, you saw opportunities in some of those rate-sensitive sectors even before we got this news of this ceasefire, didn't you? You thought the market was pricing in too aggressively rate hikes. We wouldn't get all of those. So yes, you don't think we should get those rate hikes now. So what kind of opportunities in the likes of real estate, utilities? These are some of the sectors we're going to watch at 8 o'clock this morning.
Absolutely. And we already see in the pre-market trade that some of these stocks are trading substantially higher. I do think, and to me, the key variable here is the real bond yield, less so than the inflation break-even rates. And when we look at real bond yields in the Eurozone, they have reached the highs of the post-22-23 inflation shocks in the last couple of days. So it's a really good opportunity to invest into these yield-sensitive sectors. Utilities have the distinct advantage that they also benefit from consistently higher natural gas and oil prices, as electricity prices will likely remain high for the remainder of the year. Because remember that even though we're now opening up the Strait of Hormuz for 2 weeks, a lot of the infrastructure remains destroyed, and the supply overhang that we had at the beginning of the year, we no longer have that. So oil and energy prices in general will remain elevated for the rest of this year, and that is really good for utilities.
So is that an inflation shock or a growth shock? We've been debating this for the last few weeks as to whether or not we need to worry about one or the other. The implication seems to be that we take inflation off the table.
Or one after the other, I don't know.
Yeah, precisely. Yeah, that's what we were discussing yesterday.
I think our inflation models indicate that, yes, it is an inflation shock and a growth shock, both.
Right.
But the inflation shock is so subdued. It's about 0.5 percentage point to 1 percentage point, and it really is transitory if we are staying in this environment where the Strait of Hormuz kind of normalizes and oil and gas prices remain at current levels. And I mean current levels as of yesterday, $110 per barrel crude oil. Then the central banks have a really good case of looking through and focusing more on the growth impact, which is arguably more longer lasting. And that gives them the opportunity to say, okay, we're not concerned about the inflation shock. We're not going to hike interest rates and add to the growth worries. We focus more on the growth worries. And that means staying put, potentially in the second half of this year, even a cut.
Joe, is this just a generally higher inflation world that we enter into in the medium term with the US a slightly, a less predictable actor? Some globalization trends already in question as a result of this and other activities, and the higher risk premium we have to attach to energy coming out of the Middle East. Is this just all broadly inflationary?
Oh, yes, absolutely. I think I like to say free is the new two when it comes to rates. And the reasons are actually manifold. It isn't just the current events in the Middle East and the higher risk premium around the energy supply, but it is also demographic trends in Europe that lead to an aging population. Yeah. And let's not forget that a year ago we were sitting here and talking about Liberation Day and the deglobalization effects. And globalization has done one thing over the last 20, 30 years, and that has been a consistent disinflationary impact on a lot of imported goods, and that's falling away.
We've done all this. A lot of what this means for earnings. What does this mean for earnings? We're starting through into the earnings season now. What does this earnings season look like? Yeah. Do we wait for the next earnings season before we start to see the impact? If you're worried about growth, are earnings estimates too high?
They are. We think that across Europe and in the US, they are too high. In Europe, we do think that there's still single-digit positive earnings growth possible this year, but the close to 10% that are currently priced into the market is too high. There has been a significant sentiment shock. You see that in the PMIs everywhere. You also see it if you go below the headlines in the new order intake, which has kind of fallen off a cliff. Yep. And the next step will be the employment situation that is going to worsen. So earnings growth, I think, in the mid-single digits in Europe is possible. In the US, 10 to 12% is definitely possible, which is, mind you, about half of what the market price is in at the moment.
Joe, thank you very much. Thanks for your time this morning. Joe Clement, Managing Director and Research Analyst of Strategy and Economics at Panmure Liberum. Thank you very much for rolling with the market moves this morning. Coming up, gold and copper jump on the back of that ceasefire deal between the US and Iran. Just some of the assets we're watching, and a timely conversation then with Evie Hambro from BlackRock, who'll be with us shortly. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Minutes to go until the opening trade here in Europe. Futures are unbelievably positive right now. No, I say unbelievably. They are believably positive. They are very positive. You can look at the screen in front of you and see what is happening. The Stock 50 futures are up over 5%. FTSE's got a load of energy assets in it. Does it mean, does that therefore underperform? The CAC is up by 4%. The DAX is having a very good session this morning, very energy dependent. On the other side of the trade, the German economy. So you're kind of seeing what you'd expect, but the magnitude of the moves are enormous in equities. They're even bigger, you could argue, in the bond market.
Yeah, absolutely amazing. From equities, or on the equities front, we'll certainly keep an eye on anything that is bond market related, that is influenced by bond markets, which is, at the end of the day, most things. We're watching European bond markets open up this morning then, and the drop in yields is quite staggering, certainly on Italian BTPs, which, of course, often move around more than the rest. They are down 32 basis points at the 10-year. I'm sticking to the 10-year because the moves are big enough there. On the French OATs, down 25 basis points, the Germans down 18 basis points. I will point out, for comparison, we were up 10 basis points just in yesterday's session.
Yep.
So these are incredible moves, and this is one of the features of the last few weeks. It's just been outsized moves in bond markets and people being caught a little off guard.
Is the market swinging too far one way? Does it come back? Do you fade the moves that you're seeing on the screens this morning? I think a lot of managers will be sitting down trying to figure that question out this morning. It's interesting to see what's happening in metals as well. You've seen, again, a lot of turbulence in this space. Energy assets have been the focus, but metals have been a huge focus as well over the last few weeks.
Absolutely. Let's get an update on that. Gold and copper gaining this morning after President Donald Trump and Iran agreed to a 2-week ceasefire to finalise talks on ending the war that's upended markets. Let's bring into the conversation Evie Hambro, Global Head of Thematic and Sector. Really nice to have you with us this morning. Let's focus on gold, certainly to start with, because we feel like we've learned a lot over January, February, March, lots of different things about what is good for gold prices and what isn't, and how gold should perform. What message do I take away from the fact that gold is back to gains this morning, up by 2.6%?
Yeah, I think what we've seen is coming into this conflict, there were incredibly strong fundamentals across, a variety of different parts of the global economy. And the conflict has obviously dominated, for the last, several weeks. And so what we've been thinking about is, if that was to disappear, what would the headlines be written about? Would it go back to where we have come from, or would there be some legacy impact from the conflict that would last for a period of time, 3, 6, 9, 12 months into the future. And trying not to lose sight of those fundamentals has been absolutely core. So kind of staying invested for us has been a kind of key thing to focus on. With regards to your question on gold specifically, you know, when we went into this, there was a commodities bet that had been building for the last few years. We'd seen the commodity moves. People were kind of thinking about commodities for portfolios again. It wasn't becoming mainstream. It wasn't consensus, but there was definitely a bet on. That bet didn't contain energy. And so when the conflict arose, there was a kind of reallocation within the commodity sleeve towards more of an energy weighting into oil and gas, and obviously things that were in there were taken out, and that's what caused the selling in the short term.
Okay, so we don't draw the conclusion that gold is no longer a haven and is a liquidity play. You think that this was to do with the fact that gold had already rallied so far January, February because of other matters, and there was a lot of money then just decided to go into energy instead, to rotate into energy.
I think there was a rotation within the kind of commodities sleeve that people might have had in their portfolios. But when you look back at the fundamentals, you know, what is the outcome of this conflict? You know, our governments have they now got less debt? You know, are they spending less? Have they sorted out the problems that they had prior to this? None of it. It's actually got worse. You know, there's now more spending on defence. There's probably more spending on energy resilience, energy independence, things that probably weren't as much on the agenda as they probably are now. So I actually think that the level of spending of government is going to go up. And we had that incredible statistic, was it last week, I think, where we had less coming into the UK government from income tax than was going out in welfare, you know, for the first time ever, an extraordinary number. So the problems in government around the world are very, very extreme and only likely to get worse. Gold is going to be a major beneficiary of that. It has been and it will continue to be so.
Two questions come out of this. The under-allocation to energy, I'm assuming that doesn't go back to being where it was. So are these funds going to be more allocated towards energy because they now see the risks, the longer-term risks within the Persian Gulf, and as a result of which maybe they hold more energy and less gold?
Yeah, I think we touched on this before in previous things. I think that when you look at the relevance of the commodities space to the global economy and its irrelevance in terms of enterprise value or market cap, you know, there's a big gap there. You know, they're very, very underweighted in terms of sectors financially, but they're so core to the global economy. And I think this has been a bit of a wake-up call. People say, actually, no, we need to think about this. And, you know, do energy prices go back, or energy commodity prices go back to where they were prior to the crisis, or do they retain some kind of premium because of uncertainty? And, you know, I think we're also this is the first day of this ceasefire. You know, there's going to be a lot of debate over the next few weeks, and it might not last.
But if I'm a commodity fund, I'm now holding more energy than I was before. Does that mean I'm holding less gold than I was before?
Potentially, yeah, right. but you probably have made quite a lot of money in energy, and you might be rotating that out and coming back into an area where you've given up some.
If I'm spending more on defence, do I spend less on gold as a country?
Well, I think
do I sell my gold? And there's some countries have talked about this. Do I sell my gold if I need to rearm? Because there's an asset that is highly valued, and I can use it, therefore, I can turn it to missiles and guns and tanks and bullets.
Yeah. Or do you sell things that are going to continue to depreciate and turn them into real, tangible assets? So do you sell your dollars to go and buy military hardware and invest? You know, that's what I would be doing. I would keep the assets that are going to hold their value through time and get rid of the stuff that's going to lose its purchasing power.
Evie, sticking with gold for a moment, you probably like this opinion piece on the Bloomberg Terminal by Aaron Brown, our colleague. Talks about gold keeps winning the battle with economists, and it's got a very long time horizon, this particular story. But he talks about how central banks, including those in China, India and Turkey, are buying gold as a form of geopolitical insurance. We talked about this a lot in January, February, even before this war took place. And it's a vote of no confidence, he says, in the system. If that's what this gold trade is all about, what is the upside limit to gold? How high can gold go?
See, I love that phrase. I've never heard that before, a vote of no confidence. Yeah, I was at an event last year where this exact topic came up. And the summary, or one of the summaries from that event, was that actually the price of gold is an output of the problems. Yeah? And so there isn't necessarily a number that you'd say it can't go above or it's going to get to or whatever else. It's just how big are the problems. And if your author there is right and these problems just continue to get bigger and bigger and the vote of no confidence rises, then the commodity price will continue to increase.
So it's up to Western governments to fix the system?
I think that's always been the case, hasn't it? You know, we as taxpayers are sitting here and the money's going out and, you know, where's it going and what's happening to it? And I think that the underfunded nature of governments is going to continue to increase. And that's going to create problems in the financial system, and it's going to be reflected in things like gold.
So we can still find ourselves in a situation where higher bond yields, which are potentially giving a reflection of concerns around government debt, do not equal sell gold, because logically, non-yielding asset, yielding asset, higher what the yield goes, you don't want the yielding asset. They can both rise at the same time. Bond yields and gold can both go up at the same time.
Well, you're being compensated with higher yields for a loss of purchasing power, aren't you?
Yeah.
Yeah, and so gold does exactly the same thing. It rises in price to reflect that loss of purchasing power.
Should we talk about other metals? I mean, there are some metals. You talked in your notes ahead of our conversation that maybe the world was underappreciating real assets and the need for them and the role they play. I mean, I feel like we talk about that quite a lot on this programme because London has quite a lot of mining companies, and it's often one of the things that stands out and makes London different, energy and mining. But you think that investors should reflect more on all of the technology projects around products around the world that and beyond that need the basic resources that you follow on a day-to-day basis?
Yeah, I think prior to the conflict, people were, you know, the last few years has been dominated by technology and the AI trade and so on. And I think coming to the end of last year, or the second half of last year and into the early part of this year, there was generally an inquisitive nature to investors looking for second and third order beneficiaries attached to the AI trade. And so they were starting to kind of go upstream into the supply chain and look around and see, you know, discrepancies in valuation. You know, was the AI trade at the end trading on a massive multiple, and were the suppliers who are benefiting from the same spend in terms of the capex that was going out there on a massive discount? And that was the case. So we're seeing this kind of rotation of capital into different areas, but attached to the same trend. I think the commodity space is exactly like that. You know, it's just a little bit further upstream. It's not in the supply of the transistor, it's the things that the transistor's made of, or it's not the cable manufacturer, but it's the copper that goes into the cable and so on. So, you know, I think people are looking across there. And so if this ceasefire does last, and if it does turn into some element of peace, and it is sustainable over the long term, we'll probably revert back to the trends that were driving markets over the last few years, with some extra stuff related to the impact of the conflict. But I think that's where a lot of the money will go back to, and commodities will be a big beneficiary of that.
Are mining stocks still mispriced? Definitely.
You know, we've seen a lot of retracement in valuation over the last few weeks. Big falls in gold equities, big falls in the broader miners. Commodity prices have actually found floors. You look at the floors as in bases rather than failings. But I think, you know, when we look at something like copper, $5.50 a pound seemed to be the kind of floor that was found. It's come up since there. Look at the disruption in the aluminium market. You know, I think we touched on that last time. That has been pretty profound. Those companies are likely to have a significant win on the back of those earnings, and then you can go further down the tail into some of the metals that are less well known, the kind of rare earths and so on. You know, if this defence spending rallies and it actually starts to be deployed, we're going to see huge amounts of demand for those kind of commodities, and that's going to be long lasting, because, you know, it's not just a ceasefire. What about the restocking of the inventory? That's going to take a long time.
Evie, it's always great to see you. Thanks for stopping by to see us. We always appreciate it. Thank you very much indeed. Evie Hambro, Global Head of Thematic and Sector Investing, joining us from BlackRock. Evie mentioning what's happening with the inflation story, what's happening with the interest rate story. Some Fed policymakers do remain cautious about the economic outlook, with the energy shock still very much front.
My concern at this immediate time is that we've got to get our heads around an oil shock, which is going to drive up prices in a stagflationary way, potentially.
Austin Goolsbee, the Chicago Fed president. We're going to discuss more on the challenges ahead for central banks. Take a look at the bond market moves this morning if you want evidence of that. That's next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game. I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the mid for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television wherever you get your podcasts.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
.45 here in London. This is the opening trade, of course. Welcome back. Wednesday, the 8th of April, and we are set up for an incredible session here in Europe with some real strong gains expected on European equity markets. We will see a very different story for some of the energy names. I'm looking at some of them called down 10% perhaps as oil prices dropped by more than 15% this morning. I guess that not to be surprised about, and aviation set to be one of the big gainers.
Absolutely. Let's talk about the inflationary story around all of this as well. New York Fed President John Williams says the risks to inflation and employment from higher energy prices are in balance and that he favours, therefore, holding interest rates steady. Sat down with Bloomberg's Mike McKee in New York.
To my mind, monetary policy today is really well positioned, given where all of those dynamics have been playing out, and well positioned to kind of wait and see on some of the effects of what's happening today. This isn't. I'm not saying we're just in some kind of we can't act. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes. Right now, I think that monetary policy, though, is pretty well positioned, given what we've been seeing so far.
Monetary policy is well positioned, but what about the economy? What's the state of the economy?
Yeah, well, if you asked me this a month or two ago, we would be talking about remarkable resilience of the economy, growing at 2% last year, looking to grow even faster this year. Clearly, with the conflict in the Middle East, that changes that a bit. Consumers, families are going to be paying higher fuel costs, gas price, with the gas price increases. So I've been bringing down my forecast for growth this year, probably somewhere between 2 and 2.5% for growth this year. And unemployment rate probably staying around where it is now, 4.3%, and economy that's continuing to grow, but roughly at trend. Again, driven by consumer spending and investments, especially in AI.
Well, you mentioned unemployment. You cut rates in the last year. We were told basically to prop up the labor market. What is the state of the labor market? Is that accomplished?
Well, it's hard to read all of the tea leaves because it's a pretty complicated situation with the labor market. We are seeing some various kind of different signals. My view is if you look at the unemployment rate, it's today at 4.3%. It's about where it was in July. So we've seen some stability there in terms of the unemployment rate and indicators. So I feel like we've seen the labor market much more stable now. Definitely not a labor market that's weakening based on the economic indicators. That said, if you look at the surveys, including the survey that we do and the Conference Board survey, that's not how people are, kind of feeling about the labor market. Definitely, we've seen a continued process of people being more pessimistic about the labor market. Not about a recession or something, but just a view that this is a pretty low-fire labor market. And maybe the views are not as strong as you would think just looking at the aggregate payroll and unemployment data.
That was Mike McKee speaking to the New York Fed President John Williams. That conversation taking place before we got the news of the temporary ceasefire. Let's turn to that and the impact it's going to have on markets and spend 3 minutes talking about that with Paul Dobson, Bloomberg's executive editor for Asia Markets. Paul, good morning to you. Take stock of what you've seen through the Asia session. I mean, we are at a 3-week high for some of these Asian markets, or for the Asian equity markets as a whole. We can ask lots of difficult questions about how long this lasts, but at this very moment, risk assets are being bought.
Yeah, good morning. That's the setup, and it all hinges on the cost of energy, right? So we've seen the big declines in crude oil, WTI, the largest drop since the COVID era. And natural gas prices falling as well after this ceasefire agreement, the hope being that energy will be able to flow back into the global economy and relieve some of those pinch points that we'd seen emerging in recent weeks. So that does a number of things. I think, first of all, it boosts risk appetite in general, but it also lowers costs in the economy. So that's favorable for the equities market. So that's why you see gains there. It also reduces the inflationary impact in the economy. And so that's good news for bond markets. So perhaps a little bit counterintuitively, they're also having a big day. People taking away bets that central banks might hike. And putting back on a little bit of a hint that the Federal Reserve, for example, may actually ease monetary policy later in the year. A couple of other interesting nuggets for you as well. So we've got a much weaker dollar. The dollar had been a haven through this so far. We've got emerging market currencies performing strongly. We've got in credit markets a couple of interesting things. Some new issuers coming to market suggest that maybe there's seeing this as a window of opportunity as spreads tighten again to get some deals away. And Pakistan, the gauge in Asia's markets, they of course played a role as an intermediary in the talks, and their market is getting the benefits from that.
Paul, what do I need to sustain the faith?
Yeah, I think two things that are very important: to see that the ceasefire actually holds and that the missiles stop flying, and two, that we start to get some shipments coming out of the Straits of Hormuz. There's 800 or so laden cargoes waiting to get out through that channel, which can do more than 100 a day in good conditions. I think that the market really needs to see that flowing pretty quickly in order to realize the assumptions that have been made in the market so far and justify the price moves that we've seen.
Paul, incredible moves in bond markets. I know we've seen some of that in Asia, but certainly here in Europe, you described maybe a little counterintuitively, but this could flow into equities as well.
Yeah. So I think that what we saw in Asia with the RBNZ is a little bit of a hawkish hold there. But what they're saying is, if we see second-round inflationary impacts, then we might need to hike interest rates. Otherwise, we might hold off. And so that's what the market is starting to price in more broadly with energy prices coming down again.
Paul, thank you very much. Paul Dobson, Bloomberg's Executive Editor for Asia Markets. Let's get an update on some of the sectors that are going to be in focus. There are going to be many of them. I mean, which sectors are not going to be in focus this morning? Let's talk to Charlie Wells and see what's top of his list. Good morning, Charlie.
Good morning, Anna. So it's definitely going to be one of those flip the script days. We're poised for a day like that. Oil price down, looking like a lot of these European oil majors could be down as well. You see the prices here, though, and you want a little bit more of a nuanced story, right? Because you want to look at maybe some of these higher beta names, the likes of Repsol, the likes of BP. They've gotten real big shifts because they have more of that upstream exposure. So look to differentiate a little bit today when we're going to see a lot of activity. Also, let's flip and take a look at this great analyst comment about not getting ahead of yourself here, right? This is a temporary ceasefire. It's great news. But again, anything going wrong here could significantly change the price of oil. So again, not getting ahead of ourselves with these headlines, despite a lot of the risk-on sentiment we're likely to see. Airlines, again, a script that could change from what we've been talking about over the past few weeks where they've been under pressure. If you look at some of the clues that we've been getting from Asia, you see some of the largest carriers there in India, in Australia, significant green today. So let's take a look to see if a lot of this red here from these European carriers, if that switches. But we've got to take another look at a great comment here from the head of IATA. Don't get ahead of yourself here, right? Don't forget that it's not an immediate shift from oil prices going down to jet fuel prices going down. So don't get ahead of yourself is what some of the wiser voices here are saying. Miners, of course, looking like gold up, copper up, silver up. That could spell good news for a lot of these European mining companies.
Charlie, thank you very much. Bloomberg's Charlie Wells there. A message just on the Bloomberg terminal from the Foreign Affairs Chief of the EU, Kaja Kallas, talking about the opportunity that this ceasefire creates, but pointing out, the Strait of Hormuz must be open. And back to where we started the programme, we'll be looking to define that more closely. What exactly does open look like? Under what conditions will it be open? Can it be open? And what difference will it make to the amount of energy that gets out?
I was just listening to what Paul Dobson had to say a moment ago. You got 800 stuck. It can do 100 plus a day. Does it take 7 days to get all of that clear? And that was
before we turned it into a war zone. It could do 135 a day. Yeah.
So it could take sort of 6-7 days just to get all of the traffic that's in there out. Do you want to get other stuff in? I don't know how the logistics work around this. And we've got a 2-week period in which we know it's open. Yeah. How it's open, we don't know, but we'll see.
And so all of those risk assessments, everybody connected with the shipping industry will be making those. Right here and now, though, we build up to the market open, where we are set for some strong gains for European stocks. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, entertainment,
and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
and the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Couple of minutes to go until the start of trade, cash trade here in Europe for equities. Gilts are about to open as well. It's going to be a big morning. We know that. Let's just kind of deal with what we've got so far. This is what S&P futures look like. We're up by 2.63%. US markets started sniffing out the fact that there was going to be a deal a little earlier. They had the opportunity to do so. But they're still only up by 2.64%. Europe's is going to open huge move this morning. And Europe has more energy exposure, therefore better energy outlook looks better for Europe, so you price it a little bit higher. So maybe that's what we're going to see this morning. But the S&P's up by 2.64%. You are going to get a bounce stateside. Let's deal with what we are expecting for Europe. Euro Stoxx 50 futures, 5.21%. FTSE, maybe not quite as much. It's going to be interesting to see what the oil majors do this morning. Looks like they're going to be under a little bit of pressure. The DAX, though, is up by 5.32%. One of the most sort of energy-intense economies that Europe has. Unsurprisingly, therefore, is going to benefit. But what do you do with the energy story? What do you do with defensives this morning? Energy is the only one that's really been up over the last few weeks. You sell that this morning and buy everything that's been beaten up? I don't know. Is that the trade, Anna?
Yeah, let's have a look at some of the sectors that are going to be in focus. As I mentioned before the break, nearly everything in focus this morning as we watch for this to ripple through these sectors. Airlines certainly in focus, hedged to certain degrees, but very much on the back foot as a result of the higher oil prices, as hedging could just take the edges off, if you like. So how much do they bounce this morning? How much of a retreat do we see for some of the oil majors? Those that focus on oil and gas, maybe there's the epicenter of the selling there, and that weighs on London. The mining sector in focus too. I would add into that list then, Guy, anything that is connected to the bond markets, anything that prices off bond markets, which is a lot of things, a lot of sectors, but real estate, utilities also in focus as these yields really drop today.
Absolutely. So here we go. Let's take a look at exactly how Europe is going to open this morning. What are the details we need to look for? Are the banks going to move? Big sector. Are they going to move off the interest rate story? What's going to happen with the energy sector? That's going to be interesting. FTSE 100 out of the gate.
The rest of Europe down 20 basis points, down 22 basis points out the 2-year horizon. So, as I say, across the curve, and as we've seen elsewhere in Europe, rolling back the higher yields of yesterday and doing more than that. So we are certainly focused on anything that is connected with bond markets. Just looking at the other sectors, Guy, where we are seeing early gains.